Good morning, good afternoon, everybody. Today is 29th July 2015. We have a major news event coming in terms of FOMC in less than 6 hours. And with much at stake, we'll discuss some key points on pairs and what we can expect out of the statement and how the USD in general will perform and how the major USD pairs will react to it. Fed Chairperson Yellen has been hinting on rate hikes to come. Market was suggesting it should have been done by June 2015, and with no question and answer session after the FOMC statement, traders will be looking if there's a hint on more or series of rate hikes to come by the end of 2015, or would there be only one rate hike that would be expected. Ms. Yellen has been taking has been taking a cautious defensive mode so far, and with no question and answer session, she might just come and reiterate the same thing that she's been saying, that we will be looking forward to some rate hikes. That pretty much would not sum it up if we can expect a series of rate hikes. Otherwise, I would feel that dollar can probably sink on that news. So unless we see something new in terms of can expect at least two rate hikes by the end of 2015, dollar probably would go in defensive. So let us start off, and I will go with everybody's favorite, euro. Currently, I am looking at in terms of it's stuck. Basically, I'm looking at this trend line out here, which is roughly coming to about 1.1 figure, and we actually attempted a short from this small breakout zone and keeping it basically to scalps for now, and coming down for the FOMC depending on how it goes and what markets digested in terms of the statement. This would be one of the key points that I'll be looking for, because if the price spikes down towards here and starts holding, that would give me an assumption that markets to a larger extent has been disappointed in terms of the statement. With that in mind, any bounces coming up from here would probably grow myself gearing in terms of buying the euro in anticipation of a move at least towards 11.25. More in-depth view on the euro, and this is what I have for right now. I know it's a bit rough, but this is the best I have at the present. I'm looking at possible range top trend line coming down here, ignoring this part. Got a test out here, almost a test out here, and then if it comes back to it, then about 1150 would be, I would suggest, a key point for the break on the higher side. Similarly, under 1.1 level, I have, if it breaks it, then I'll be looking for at least a move towards T4 or 109.30ish for that matter. So 1.1 being key, and if we get a bounce, then I would expect the bounce to come towards 11.25, 11.50, and then we'll see how it goes from there. On the downside, if it comes down to 109.30ish, I would not mind taking a smaller position, going for a buy, and see if this was just an extended to the lower side, and we can at least attempt to move back towards 1.1 and then see how it goes from there. If it starts breaking on the higher side, then this was just an extended move that came down, and possibly we are ready to go on the higher side. So this is a short-term play with 1.1 being the key. Overall, it's a bit sketchy. It's, if I have to go, then the main support is coming down towards 1.07, 20ish, 30ish. Again, this is an extended support on 8 hours, and this actually comes lower than 1.10, comes down to 109.70ish. Regardless of that, I'm still focused with 1.1 as being the key from here, and see how it goes from there. To suggest further, I don't have too much of an interest on euro for the day. I think there are other pairs available which have got much better signals in terms of technical analysis, or in terms of trendline analysis, and how we can play that. Pound is next, and this is a 4 hours layout that interests me. Already done a little bit, and that's been actually posted up. What I'm looking at here at the present is, if I take everything out, I'm looking at this range. I'm looking at this range between T3 and T4, which is pretty much holding the price. We had a brief moment on the higher side, close under, almost tested, almost tested. It's been failing, but apparently the only test we got on the lower side, or which basically helped to form this trend line, was one bounce here, dropped briefly, came back testing on this trend line, which is again a breakout trend line, and a perfect bounce, and this is where we are right now. And apparently we can get a touch close to 5,700. So pound overall, with Bank of England hinting at rate hikes, but market got disappointed earlier when it was not to come by 2015. It might be earlier 2016. Got a bump on the lower side, but it's been expected to do good on the decent data that's been flowing, especially the one that came in yesterday. And a move towards 5,700 can be seen out there. So with that in mind, there's a key point on the pound comes in close to about 5,700 zone, and I'll see if there's more can be done. Yeah, about 5,700, 5,710 extended. So these are the key points that I'll be looking for on the pound, and how we go from there. Currently, I had this channel. Sorry. I had this channel within the main channel, and we held briefly towards here. Now we getting a break on the higher side, so expected price to continue on the higher side, but still the channel top probably about 56.95, 57.10, and unless it breaks and gets over and gets a close on the higher side, then we'll shift. It'll be more likely the pound is ready to get into 58.80 or maybe into 5900 handle. As of right now, 56.50, 56.45, 56.50 will be support, and probably can get a test out here right now, and the longs would be preferred for short term for a 56.90ish target. Anyways, in terms of FOMC, in case in any rare cases it is dollar bullish, there are hints of more rate hikes, then can still expect a play of 56.95, 57.10, and then reclose underneath to 56.45, 50. That would initiate a short position targeting the base of the mid channel here, with main support down towards 54.50. So I would say about plus minus 5-10 pips around 5,700 zone that would define pound in terms of what it can do or where it might head for. And I'll see if I've got, yeah, this is an 8 hours out here, which is pretty much the same layout as per the 4 hours. This is where we got the bounce. So any move coming down on the lower side, if it's happening, if we hold somewhere around 57.10, 57.15 and start getting closes underneath back to 5700 zone or 56.90, excuse me, I'll be looking for a systematic decline towards 52.50 or whatever the number that comes in by the time we come down here. Initial support right now is 54.50 unless we use this as an extended support. Anyways, by the time this comes in, it probably would end up merging with 4 hours, because I don't expect all these moves to come down within a day or two. It could take, even if it's happening, it'll take some time, like 3-4 days, and this probably would have inclined on the higher side, merging with the 4 hours 54.50, so I'll still say 54.50 is a defining moment on the lower side. And we'll have a look on the dollar. This is a channel that has been traveling. It is a bull channel, but what's interesting here is that the drop met with the breakout trend line, got a bounce back up, and it's been bouncing ever since. But what is interesting is that it comes, makes this high, gets a drop, goes back, make a high, drop, matches it, small drop, go back higher, met the trend line, drop, made the trend line, matches it, drop, hits higher, comes down, matches it, drop, again back to here. So basically it is looking in for direction. It wants to be bull, at the same time it needs more direction, and that could be provided by Fed Chairperson Yellen in case if she hints there are more rate hikes to come, apart from just one. That's I would say that's pretty much to a larger extent that will factor in, and a profit taking that kicked in yesterday and that we see to an extent today. It's a part of the same thing that unless there is more in terms of hinting that there will be more rate hikes, at least one more by the end of 2015, the dollar could go on a defensive mode. But technically speaking, connecting towards the base of the trend line again, if you get a spike, holds somewhere around towards here and then start pushing back, on the higher side, then it's got a minor new high again coming in terms of the same layout, the continuation of a bull pattern that it is showing, but it is very patchy, is very sketchy in terms of there's a lot of zigzag up and down, a lot of swings to it. So we'll look at this level pretty much to what we already have the high. If it can match this, make a double bottom out here, goes for a bounce, that would be some hooray for the dollar. Otherwise, as of right now, it's close enough and it can pretty much break, and it could be next 2-3 days we can see some setting rounds on the dollar. Probably it can sink a lot. And another good view for the dollar comparison would be the Swiss franc. And as I've said, shown before, Swiss franc is it is the mirror towards the US dollar moves. So if I have to look at the dollar chart, I can always look at the Swiss chart and I can get the same view what the dollar is about to do, or how, or what to expect. This is basically a channel that I'm looking at from black to black. We were trading on the higher side before we got a break, retest, down, again form the channel from between here and here, and then price been trying to break on the higher side, and we had a few tests towards it, almost a test failed. Now unless today, tomorrow we break on the higher side, otherwise we can expect to move somewhere around 94xx, 94.50, 94.60 for starters. And if there isn't much movement coming in from dollar in terms of breaking the resistance or try to form or get into a new channel, new bull channel, I would expect a move eventually coming down. So dollar can lose a lot, either that or it needs to show a break today. If not today, then by tomorrow at least it needs to show a break. It needs to have Swiss franc pricing higher than 0.97, I would say, for it to show its intent that it's going on the higher side. Now a little bit on the Aussie. this is the main channel that we're looking at for right now, and just to make it more presentable, I'll just go with this. This is one of the breakout trend lines that happened, tested, got highs, and then the price has been dragging, and eventually this is another trend line that came in. I had a post on that before we even had a position coming in from 74.47, and did pretty well. We took it all the way to the lower side. However, right now the price is dying out, and one of the aspects is that, and one of the things that I do mainly is that when I look at one particular time frame, like here I'm looking at 8 hours, I don't just go confined to it, because most of the thing to see is that my style is more intradays. So I'll look for swing trades. I could be buying and selling at the same time. I mean, at the same day. I made use of a 2 hours time frame, and this is something that I've already, I've drawn it and I've kept it just in case if there's a higher move coming up on the Australian dollar. Then I know if we get a 1 or 2 breaks, then the price is likely going to come down towards here. So right now this is not in motion. Right now I've been looking at this basing declining supporting zone, and this is where it came and hit, where we backed out, and currently it is forming this channel just like the pound that's been trapped within those channels that I showed. Aussie right now is between 73.50 and I would assume 72.70ish. Today, if it's a dollar weakness, we should get a break from the higher side and get at least a touch towards 74, 74.10. Probably by tomorrow we can get a retest down here and again a break on the higher side. Actually, this can come into play. Otherwise, from this point of view, I can take it as a bear flag test here, failure, and 77, basically 70, 72, 70 in there. I'll be more than tempted to go short, because it seemed like a decent amount of pips to come on the lower side. 74.10, 74.11 for the day. 50-60 pips, I can look forward to it. On the higher side will be sketchy, because apparently there are a lot of other resistance out there. Has in 4 hours. Yeah, resistance somewhere around current resistance. As of right now, the prime resistance somewhere around 73.60ish. Alright, and this is one trend line that I've been watching, and though it's been spiked, but what the emphasis on this trend line is that had a brief spike and a close under, so briefly the price was underneath. The moment it closed higher, it started staying higher. So right now the emphasis on this pair again is somewhere around 72.80, and if I combine with my 2 hours, then up to 72.70. So 72.70, 72.80, 82. This is the important zone that I'm looking at. That if this has to rise on the higher side, then most likely for the day, then this zone needs to hold. So 72.70, 72.80 on the Australian dollar interests me. For most likely I won't be trading this pair, but then I have interest on its process. So this is what I'll be looking in terms of in terms of Australian dollar, whether it holds this zone or it does not hold, because that would to a fair extent will give me an idea on what to expect out of dollar, and in general what I can expect on other pairs that can happen. So while euro did not give me a clear reading out there, it gave me an hint, in terms of some levels. So with Aussie and Aussie, there is a chance that if we hold on here, we get a bounce, then most other majors are also bouncing. This is the way I'm looking at it, and what might prefer out of the pound, out of the euros, Swissy is my preferred layout. That is going into FOMC, I would not mind putting in orders to go short around 96.70 handle. For the Australian dollar, maybe 72.70 I can place a very small order, but a tighter stop on that, because if it's happening, then I just need a spike to come down to it and hit long. Either that, or I'll choose 1.10 euro with a smaller order and a tighter stop to see if I just get a spike to get in, and the price starts bossing in. Otherwise, I would not bother too much with that. Good setup on the process is Euro Japanese. This is an actual breakout that happened on the black trend line here. I was expecting and I was hoping another round of retests are here so I can get longs, but apparently that did not happen. And in conjunction with this, the same thing, there's another breakout that happened here. So 135.90 for today is my interest to go long. So if I'll be having a small increase place towards 135.90ish. That on FOMC, if it comes in spiking in, then I'll get in long. My style is that first only 30-40 pips, banks down, amend stops, and then see if you can go the distance. But going the distance out here would mean that if we can take out probably this zone, or let's say this high, otherwise this resistance somewhere around, I would say about 70-75, then the chances of 138 coming in increase. So that would be my target. 135.98 seems like a good position, so I'll be looking forward to that. I'm just playing a breakout zone, nothing much to do with what I expect. Overall, the pair does look bullish. It's still missing a point out here, so it can go higher than 138. So as of right now, 138 entry would, 135.90ish entry with 138 view. It's not a bad idea in terms of risk to reward. I'm just going to lower my lot size, so that would compensate for most of the thing. Another good setup is pound NZD. It looks bullish. Let's not make it difficult. This is the channel that I'm interested in. I was actually gunning for shots, missed the shots. Anyways, I'm not gonna cry about that. Again, I had this layout, but for some reason I didn't see it coming today, and then I've already missed it. So anything closer down to this zone, or maybe towards this low, I'll be looking forward to going for a buy. There is a gap out here, and general theme on the pound being bullish, especially if it goes above 5,700 and stays over there. That will be sign for more to come on the British pound. So this looks like a good setup where it can use another attempt, probably matching or superseding these highs. So in terms of good layout, this is probably one of the most preferred layout, but the price not attractive, not till at least I'm hoping it comes down at least towards 2.3 to 20ish. That would be good, even 30ish, or basically dips to getting long, and to getting long before it ideally breaks this zone, which is probably about 2.3, 50, 60ish. So this is what I'm looking into, an opportunity to get longs into this pair. So it looks pretty good in terms of setup. Again, 4 hours, almost the same. Can probably expect to move towards 2. The same thing that was coming on the 8 hours, 2.3, 50ish, 60ish is up to 70 probably would be a decent resistance for now. So anyways, it looks bullish, and if possible, if I can get a run into it, I wouldn't mind buying it. Another good cross to look into is pound yen, and I know it looks very messy, but that's the life out here. Alright, The whole layout I've discussed a couple of times. This is more in terms of let me do it this way, easy to explain. The whole setup is more in terms of inverse head and shoulder. This has been the head. This zone been the left shoulder, and I was actually expecting this to come down here, and we're full up for buys, and decent amount of buys to carry up all the way here. So it came short and went back up. Regardless of that, uh, head, left shoulder, right shoulder, and possible neckline towards 196.10, 196.20. So this is an expected move, something like that. 194.60, 194.70. In case it comes in today, that would be a good short entry for catch a swing low, and then hit it back again, break, and hit the neckline again. You have some short opportunities out here, or maybe extending down all the way here before it rips it apart. So this is a very good setup. We had a buy here in anticipation that that maybe this was the left shoulder and this was the right shoulder. We had a buy exactly at this point, but apparently came down, and then we started looking a bit of the lower side. Apparently, how you feel or how you want it to act, sometimes it does not come in. But regardless of that, the pattern is right in front of you, and it looks pretty strong. And as long as had we been very longer term players, I would not have mind. Here probably would have gone by out here, but then with intraday and swing players, and with eyes on so many pairs, is we cannot put all our eggs in one basket. So that's the way it goes. Anyways, this is a good setup for today. 194.60, 194.70 seems pretty decent to go short. Probably till at least move back for 80 to 120 pips, or up to 193 before probably can see another swing on the higher side. Another good pair, actually another good cross that I'm interested in is how I'm looking at it is this: between here and here we have a bull channel, brief temporary breakout, and a violent get back into it, hold, and to drop down towards 4 point, whatever the zone is that I'm looking at, 4.220ish, 230, and expecting it to come down and act as a support, and probably can get a swing high back from here, retesting one more time on the higher side here, and then set shorts up and see if it can break underneath and fall some deeper. So from this point of view, this move came out being a fake, close, retest, hold, and I would expect the price to come down for 220ish, and for the day that could be a good buy zone. See if you can go back and swing back all the way towards at least about 120, 130 pips. So this is another good setup, a setup that interests me. Yeah, so I'll see how it goes. Yeah, this is again the same thing. The support zone is the same thing as in 8 hours, and you can look back to swing play here. Then maybe we can end up having a head here, left shoulders, and probably right shoulder zone here. So we can sell down again for deeper down. So this is another one. What do we have on Euro? Yeah, made the resistance top, so we'll expect it to come down for 1.5, around 1.5 handle, and I would suggest that there will be some buys that will be initiated close to 1.50 handle, which all suggests that euro at the same, between euro Japanese probably 135.90ish, euro showing on the lower side before it can get some buys, and euro cash showing some lower side before it can get buys. Euro could stay pressure till the FOMC comes in. So as of right now, looking at the crosses and everything, euro looks to be on the defensive mode, on the weaker side. Quick touch on the gold, and this again was posted earlier, shown earlier, but as of right now, what I'm looking at is resistance coming towards 1.10, I would say 1.10708, and between this black and here we having a bear pennant coming in, but of course this can be extended all the way to here, but 1.105 to 1.107 resistance on dollar, and any hold out here will suggest a drop down here. And what I'm looking at is that on the weekly, we are holding to this previously held supporting trend line, broke it, and now it's coming and holding it. So that's a resistance, the same resistance that's been pointing on the 8 hours, and possibly another touch down towards the support zone that held on that mammoth drop that happened a couple of weeks back. So 1068 up to 1070. Any test down towards there and a hold, that would be a good buy point. Probably initiate buys and bring it back towards T3, which is about 1130. So that could be a very decent trade setup, at least a short-term trade setup that could last for 2 to 3 weeks. Buy close to 1070, and then try to take it for $50 to $60 on the higher side. So that's the one that's interest on the gold, along with possibly if aggressive, or depending on FOMC and the price action, can look to sell in their T3, which is basically about under 1082, 1081, can look to sell it for at least about $8 to $10 move. I prefer to buy 1068, 1070, any one of those numbers. I would like to buy, use $4 or $5 stop loss, and the risk to reward could be huge, humongous. At least an attempt back towards 1105 before if it breaks, and try to take it on the higher side towards 1130ish. So that's what I'm looking at the gold. Quick on the S&P, and it's pretty much made a mess out of itself. And this is one of the support zone that I've been looking for a while now. Came testing 2-3 weeks back, and that was a heavy grind. Cleared the resistance, came back again and started dropping. So, and if we can expect a move towards 2120ish. So anything close to 2120, 2122, and if it starts holding, that would be another round of selling that can come in on the stocks. With a lot of intervention that's going on currently from the China by PCOB. It's just that if they stop intervening on stocks, I think stocks are ready for a big fallout, and I would use any upticks to sell it. So for today, maybe 2105 initial point, and then if it starts breaking, then it's got potential to hit another $15-16 move on the higher side. So 21, 22, 21, 23 could be a good zone if it comes in today to try out shots. Overall scenario is the same thing. Ever since we started has been making again and again, inverse head and shoulder. But it fails all the time. It fails just like the dollar. It's showing the hand, but it keeps on failing. So it needs to do something out of, come out of the skin. Otherwise, uh, there's a huge fall that's, if not for intervention, this would have been lower, much, much lower. At least about $100, $150 on the lower side, just to begin with. So that's pretty much wrapping up all the session. Again, emphasis on the dollars in terms of how it does towards here. It can hold it and can play in conjunction with the Swiss franc. If it's going to clear on the higher side, that's an 8 hour, so close on the higher side, and so much holding and actually pushing the price all the way decently down. So next attempt at a close higher, that would be dollar bullishness. Otherwise, can be seen dips on the lower side. Do I have anything else? Canadian dollar, maybe. Yeah, Canadian dollar is showing a distinct pattern of inverse head and head and shoulder. Take this as a head, this two series of left shoulder, probably right shoulder, like that. So with that in mind, from this perspective, above 2,900, it likely should do another test of 30.50 and most likely hold on towards this zone. So it's quite patchy overall this looks on the higher side. It's prone to hit 135. So what other pairs could do something? Canadian dollar is, well, it can use a dip to get in long, but how far? Well, under 2,900, then it can show some intent that it wants to get on the lower side. A good point probably would be, yeah, 28.30, 28.40 looks an excellent point as of right now. That if it gets tested, there's likely, buyers likely to come in and pop the pair on the higher side. So yeah, maybe 2,900 zone for the day, but the 28, 30, 40 would matter. Not that it clears that out. This is probably going on the higher side. So see out. My intention was to keep it, short video for about 10-15 minutes, but probably I've gone over half an hour. Yeah, this is another setup that interests me as of right now. I was looking another retest towards this line to go long on the pound Aussie. Apparently it keeps pumping on the higher side. We were short momentarily off from here, made some, but now we again breaking on the higher. Anyways, 2.1450ish. It's my number that I still have an interest to go short out here. So 2.14, and then see if it can swing at least back till here. And if it closes under, then I'll be much more inclined to see a bigger drop on the pair. So with this point of view, temporarily pound on the higher side. Later on, probably Aussie will become a better bit. But of course, we'll see how it goes, because overall the pattern on the pound out looks bullish. It looks bullish indeed. Opportunity to go sell here, now probably it can incline on the higher side, but 2.1450ish for today, and I'll take my chances on that. GCAD, I'm looking at right now. It's holding down to this resistance zone. We actually had shot 2189 trigger, and we were basically looking for a scalp. So anyways, I'm interested in this zone. This $2 here. So for the day on FOMC, either it's going to be Canadian dollar or it's going to be the Aussie, pound Aussie or pound Canadian that I will leave an entry with either 2.1450 on that or 2.3 45.50 on the pound Canadian, because that looks like a top and matching bottom comes in our here. So what we can sense between the pound Canadian or pound Aussie is that eventually they look on the higher side, but they both can use a dip. So let's see how pound does between 56.95, 5700 to let's say about 57.10. If it starts failing out there, others also start failing at their supports, we can see some shift of balance, at least temporarily, short term, slowing down here and then buy and get on the higher side. So 2.08, 2.09 is doable on the pound Canadian. This is what I'm looking at. I'm looking at a retest on the higher side here, and 2.07 change, that would be decent. So there's still plenty of room on it to go, and I think that sums everything up. Just gonna quickly look at how euro is doing right now. Yeah, maybe 1.10 should come in. Pound is relatively doing well. Yeah, again, stuck on the higher side, of course. What we discussed earlier, that probably going to test out here and then bounce back up. Sorry, that was a chart. So this was a short-term trade. Scalps and everything. We resorted to mainly scalping for the day, and days like this, it serves better. And me personally, instead of leaving too much at stake for the major USD pair, I'm always more interested in crosses. So I have my eyes on few, and then it won't hurt me to leave a smaller size orders towards some of the levels that I mentioned, especially on Euro Japanese is one that interests me. Euro Canadian is the one that interests me for the long side. From 4 to 425. I mean, 4 point, whatever the level that was, and 135.90 on Euro Japanese, can use a dip on the euro to get in long and see how it goes. So play safe. Be attentive. Don't put all your eggs in the same basket. And if you're trading today, then it would be advisable that lower down on your lot sizes, because we can always come down to an educated conclusion of what we can expect. But the market, not usually they don't. It does not care about how you feel and things. It can go in one particular direction and can keep on going. So safety always matters, and for that matter, I would like all of you to stay safe and be wise when you're trading. Thank you, everybody.